Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, May 27, 2021, and this is the daily report for gold and silver and now copper. Copper had a tremendous move, gaining 14 cents today. We'll talk about that at the end of the show. And gold absolutely clung on to that price point right around 1900. We also sent out a trade alert recommending that you exit your long position in June, roll it over into an August. We'll talk about all of those things when the show begins, which is now. For those of us that trade gold futures, it has been the most active contract, June 2021, that will come to an end with first day notice being tomorrow and the end of the month last trading day, of course, occurring tomorrow. Currently, we have gold down $4.40, $18.99.40, and I do believe that that is already reflecting the new most active August contract. This first chart is a daily continuous contract of gold. First, it has a very short data set for a fib retracement beginning at approximately 1961 down to the double bottom at 1671. We also have two exponential moving averages, the 50 and 100. We can clearly see that we have a defined cross between those two key moving averages. Lastly, we have the 200-day moving average. That is in simple format. And we can see that we've got solid support really at 1851 to approximately 1855. But currently, we still have some resistance at 1900. While over the last two trading days, we have had intraday pricing above that price point, we have not on a closing basis yet to move the needle to above 1900. So the question that really is being raised by many traders is, what will it take to move gold past this key and psychological level of 1900? And as you know, I believe if it can do that, we really don't have any major resistance until we hit these tops at around 1960. We did send out a trade alert. We recommended rolling over your June positions into August. We'll talk about that a little bit tomorrow, and of course on the shortened week. Next week, we begin again on Tuesday after the Memorial Day holiday. Even with one trading day left in the month, if we don't get a huge move one way or the other, this was a tremendous move from about 1768 to just shy of 1900. The last time that we saw this kind of candle occur, meaning the size of the range, happened in July of this year. There's another interesting facet when we look at this monthly chart. From these highs that came in August down to the lows that occurred a couple of months ago, we have the making of a three-river evening star variation. The reason I'm calling it a variation is when we look at the pattern of these last 4 months, it begins with this long red candle, a doji star, then a smaller green candle that really hasn't opened above the closing range, and then a solid move up this month. And that signals on a much longer term basis, just as the 200-day moving average signals, that we are truly in a long-term bullish trend in gold. This current chart we're looking at is a weekly Japanese average Heikin Ashi chart, and it clearly shows that we have had this defined move to the upside beginning when we hit the first of our double bottoms. You can see that expressed here and here on our weekly chart. The candle size started out small and then eventually began to grow. At this point, for the last 3 consecutive weeks, we have a large body size. We have no lower wick. We can actually call it 4 weeks. That is a solid indicator that on an interim term, gold is in a bullish demeanor with solid bullish market sentiment. And traders, I am absolutely pleased to report that we exited our June gold position with nice profits, $4,650 per COMEX contract. We are now in the August month. This is going to reflect on the continuous contract. We're looking at a daily area chart, and really what I'm focusing in on is this 200-day moving average and the fact that on approximately May 17th of this month is when we cross back above the 200-day moving average. And that, to me, is extremely solid news, especially given the fundamental events and issues that have really propelled this market into rally mode since the end of March. Copper had a phenomenal gain today of 14 cents when trading in New York. It has moved into Australia and is above the closing price of New York, currently trading at $4.67 per pound. Of course, we are long at $4.55. We're looking at a daily copper chart, and as you know, copper went to an all-time record high. That was back at the beginning of May. It hit these highs. This is on a closing basis of $4.75 per pound. Our stop is indicated by this white line right here at 439. We're long at 455. We avoided getting stopped out. We now have our entry price far below current pricing to the tune of about 20 cents. In terms of contract size, that would be $250 per penny move. We've got 20 cents. So we're starting to build some pretty good profits. I believe over the next 3 months, we could see copper go to $5 a pound. But if you recall from yesterday's show, I cited an article in which there is a bank in Canada that is predicting $5.25 for a single pound of copper by the end of this year. About a month ago, we talked about the Strategic Commodity Group of Bank of America. They're looking for $5.87 in the next couple of months. Both of them are very optimistic views that the price of copper will rise. I continue to be extremely bullish. Maintain your long position as well as your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.